then to go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
All right, good morning, everybody. Happy Monday. Welcome back to the morning show, the best morning show in finance. I am Spencer Israel, joined as always by JC Parets and Steve Strazza. I see 60 people were waiting for the show to start, but nobody in the chat. Come say hi to me, whether it's on YouTube or on stockmarketmedia.com. Come say hi. I'm lonely here. I see Samuel. I see PJ. I see Ravi. Let's get some more participation in the chat. Hope you all had a great weekend. Here's what's on the docket for today. We're going to talk about China. They are in focus because they are trying to grease the wheels, whatever you want to call it, for their own stock market, as they're want to do from time to time. So Chinese stocks are all trading higher this morning. I guess we'll talk about that. New guest today. We're all going to make a new friend. Okay, we're all going to make a new friend today. Jason Shapiro. You may know him on Twitter as Crowded Market Report. We had several people recommend him for this show. So I went ahead, reached out. He'll be on the show in around 20 or so minutes to talk about how he trades. He trades a lot using the COT reports that we look at as well. So we'll talk to him about that. We'll have Kimmy Sokoloff. We'll have Option Sean. And there is the chat. How's everyone doing? Good morning, good morning, good morning. And then we'll talk about charts on our mind. We got some good ones today. Some funny ones too. I'll tell you that. All right, let's go.
Good morning, Mr. Strazza. Oh, I guess Spencer didn't get the memo about the blue shirt this morning, huh?
Do you guys text each other about what to wear? Seriously?
No, he was texting me this morning, busting my chops about the Miami Heat is what he was texting me about. What was that all about?
That was
too early in the morning for that.
That was from one of our clients. He thought it'd be really funny, wanted me to pass it along to. That was from Charles.
Shout out, Charles. Maybe Damian Lillard comes to Miami. Maybe he doesn't. You know, but I gotta make money in the market, whether Dame comes takes his talents to South Beach or not, right, Spencer?
Either way, you got to make money.
Spencer's more of a sports junkie than a market junkie. A fun fact about, would you agree with that statement?
I would say it used to be 100% sports, 0% market, but in the last 6-7 years, it's the spreads really come in tight. Really
what about
tight.
since you've been hanging with us, the rate of acceleration towards the market even more? If I had to guess,
spread's getting tighter. I'm still a huge sports fan, but spread is definitely
40.
It's getting tighter.
40 sports market.
60-40, sure. Yeah, we'll call that. I think that's fair. 60-40.
All right, we got work to do, Strazza. We got work to do.
We were the catalyst to clean up this divergence.
Because that's our life mission, of course, is to get Spencer into the stock market. Right?
I don't know, man.
I wake up in the morning.
Maybe 55-45. It's tight. It's tight. It's tight.
So you're saying there's a chance?
It's tight. Yeah.
No, most people are more focused on football these days than basketball. That's where my head's at. You know, talking about trades and offseason. You see the Giants making moves out here? See the Giants?
Nobody knows.
Actually, honest to God, I didn't.
We're not usually this active in the offseason, but you know, got some new folks in the front office. Seem to be doing pretty well.
I was watching the Little League World Series yesterday. That was incredible. If you didn't watch that, you missed out.
I definitely did not.
Walk off home run to win the World Series.
Really? That's pretty sweet. I didn't know that.
In the bottom of the sixth.
Really? Time? Do they play 6 innings?
They play 6 innings, yeah.
Got it. Well, that's cool.
Enjoy that.
Oh, it was great.
Golf was really boring yesterday. It wasn't even a match all weekend. Hovland ran away with the championship. And preseason is just bad, guys. Like, I tried to watch Jets-Giants the other day. Even with Aaron Rodgers coming, thought that would be exciting. The game, like,
man, the move is you go to YouTube afterwards and you watch the highlights. That's how to do it. I did that last night. I was like, man, this is. Okay. They didn't used to have that like in the old days for the preseason games. You'd have to sit through the whole damn thing. Now you can just watch the highlights. That's good enough for me.
Can we just flesh this out right here real quick? YouTube TV, catch up with key plays. You know that feature?
Nope.
We don't have YouTube TV.
If you watch sports on YouTube TV, which I have to because I
do. I have YouTube TV, but I haven't done that part.
dude, try it. Go back and watch one of the games that you have recorded and do catch up with key plays. I don't know if it's a robot or a human doing this, but it's pretty amazing. Like, they do a great job. It's like you watch the whole game.
All right. Really. Dow Futures up 170 points here, 50 basis points. S&P's up almost 50 basis points. NASDAQ leading the way, up 60 bips. Bonds up again. Gold and silver flat on the day. Copper flat on the day. Dollar flat. Natty Gas, the Widowmaker, up 5% on the day, with the volatility index inching up, actually, with rates down. So what do you say we get into the state of the markets there, Mr. Spencer?
Let's do it.
All right, gentlemen, here's how I see it. Stock market did very well during a period of time when the stock market was supposed to do very well, right? After midterm election years, stocks tend to do great. As it turns out, they did fantastic. The NASDAQ, I believe, got started off to the best 6-month period, best first half of the year in history. So needless to say, breaking records, stocks did great when they were supposed to do great. The most bullish period of the entire 4-year presidential cycle. Then come Q3 of that pre-election year, which is the one we're in, stocks tend to struggle, right? That August of the pre-election year, stocks tend to struggle. And what do you know, Mr. Strazza? Stocks have been struggling. So you've got these serial killers out there. I mean, I don't know who thinks this way, but there's people like the Perma Bears are back. They're like, aha! I told you that record-breaking rally was just a bear market all along. It's like, wait, what? Right? Yep. Bear market? What are they even looking at their charts upside down? That was not a bear market. It was actually one of the greatest bull markets ever. We're probably still in the midst of that, but we're just undergoing a normal correction. Now, every big move ever in the market in history has started out with a small move, but not every small move turns into a big move. So how do we know, Mr. Strazza? How do we know if the small move is going to turn into a bigger move? How do we know?
Can I, real quick, you just breezed over it, but it's a great point and it's an important point, and I'm seeing a lot of it lately. Sorry, my Optimus freezing. I hope my face isn't. It's one thing to, like you said, point out, oh, look, like the stock market's finally catching lower. I'm seeing a lot of people talk about the bond market and say, oh, the bond market was right all along, or pointing out like the yield curve. Oh, look, the yield curve was right all along. Well, if that's your point and you were sitting on the sidelines for the last 3 quarters, that's not good analysis either, right? Like you said, you just missed one of the biggest runs for the NASDAQ 100 in the history of the stock market. Yeah. So,
but I was getting 4% in my bonds. Yeah, but now include the opportunity cost of the 50% ripper and the tech that you missed, right? So opportunity cost is real risk, and you could tell yourself it's not and pretend that those things are not happening, and you could close your eyes and hope it goes away. You can do that. Yeah. But when it comes to investing, you have to calculate the opportunity cost. When everybody was like, what a no-brainer to get my yield in bonds, that was actually the worst possible move you could have made. You could have literally done anything else and made exponentially more money. So something that was such a no-brainer was actually pretty dumb.
Yeah, you underperformed everything. Right.
Oh, it couldn't have been a worse decision. So hold on. Yeah. So let's get into what would likely happen if this is the beginning of a much larger, more severe correction, this bear market and, epic collapse that these these psychopaths continue to tell us over the last several quarters. Why don't we take a look at credit spreads? This is a real market, guys. This is we're looking at $140 trillion asset class. If there is real stress in the system, you're going to see it in credit. That's just the way markets work, right? It's not like my opinion, like it's just facts. And what we're seeing with this, depending on what index you're looking at, 3 to 6% correction or so in the month of August, credit spreads are as tight as they've been all year, right?
Yeah. Looks great.
No stress whatsoever. So here, an easy way to take a look at credit spreads, high yield credit spreads in the United States is just look at a simple ratio of junk bonds to treasury bonds, make sure the durations line up, and that ratio should be falling apart if there was real stress in credit. In fact, we're seeing the exact opposite. Actually, very impressive. And then another couple of ratios that I would point out are the following. Go to the next slide there, Spencer. And then it's high beta versus low volatility. hanging in there pretty well, and the discretionaries relative to staples, I'm actually surprised. I would have expected at least some rotation into these defensive areas, like even a little bit. We're not seeing anything. So if the market's going to have a real severe correction, we're going to crash into the end of the year like they keep telling us, you're going to see these ratios rolling over pretty hard. No?
No, I'm very much with you on that point.
Okay. And you know how much I love my magazine covers. These journalists do such a good job of sort of aggregating sentiment amongst investors. This is a good one, Strazza. You got this Z guy, and he's riding the dragon, right? But the dragon is really a snail.
Come on, it's Chi. It's Chi.
Chi? What did I say? Z?
Yeah.
All right.
It's not Chi either, though. It's not Chi. But anyway,
whatever.
It's like a G. Anyway.
Whatever El Marino's name is, that's not the issue here.
It's a G.
He's riding the dragon, but the dragon is a snail. Can we not, like, his name is the least of the issue here. Can we talk about this? Like, it's a dragon, but he's riding it, but it's a snail because it's moving so slow.
So what do you do with this kind of information? I mean, what do we do with this one?
Well, when I see something like this, it's like, hey, maybe we should take a look at these China stocks because there might be something there, right? That's what it is. It's kind of like the hot corner. It doesn't mean just because some CEO is YOLOing his own company stock doesn't mean I'm going to do it too. But I probably want to take a closer look, right? That's it. And that's how I look at this. I see the she guy, right, riding the dragon that's a snail, and I say, maybe it's got a little too extreme to the other side, and maybe people are just a little too pessimistic here. No, that's and maybe they're not. Maybe they're just the right amount of pessimists. You know,
for a region or a trade or a theme that most of my career has been looked at as just like next level bullish, right? Betting on China, I would say India too. I've never seen sentiment so bad, right, around China. Nobody wants these things anymore. We've had a number of people on our show just over the past few weeks kind of echoing that same sentiment. So maybe there is some sort of opportunity here. It's tough, man. You know, this trade comes with like literally unlimited risk. And I think that's why people are really, really shying away from it.
Okay, well, why don't we take a look at the charts? Here's the FXI. Is this putting it in a bottom? You know, bottom-ish? Bottom-y? No?
Totally. Look, these stocks have been absolutely beat up. We had that, giant move back in 2022. It looked like it was the start of something and then just totally fizzled out and it's been just dead in the water ever since. International stocks have really, really cooled off this year. Like the back half of last year was good for like developed markets outside of the US. Do we get rotation back into, global equities, and maybe does China become a leader again? I think it's a valid question to ask. But we're not seeing really any evidence of it yet on the chart. I mean, we had one up week? I don't know.
You know what's really interesting? Go to the next chart. It's less about China and more about emerging markets. So in blue, you're looking at emerging markets ex-China. And then up above, you're looking at China. Is it that different?
No, but it is. It's so different. I'm with you.
Wait, what is it that's different?
Why is it? Wait, but why is that? That doesn't make sense.
Because Strazza goes to Asia once, and now he's an expert. So hold on. In your head, right? In your head, the economies are very different. The countries are very different. What's going on in Vietnam and what's happening in China are very different. But from an asset allocation standpoint, it's not. Right? Is that your point?
It's liquidity. This is driven by liquidity, right? So sure, like when one catches flows, they're all going to catch flows, these emerging economies. I do think there comes, a time where we will show performance charts of emerging countries and there will be some really clear winners and some really clear losers. But yeah, for the most part, all global equity indexes are going to track one another pretty well.
And this is something that our friend Mark Dow, by the way, Spencer, get Mark Dow on the show. I don't know why he hasn't been on yet, but this is something he talks about a lot, which is that allocation correlation. Even though Brazil and India couldn't be more different, in terms of their economies and everything like that. From an asset allocation standpoint, when managers are like, we're putting this amount of money in emerging markets, they kind of sprinkle it around. So there's that asset allocation behavioral correlation more so than what's going on from country to country.
Let's talk about that more when you're done. I want to talk about these BRIC countries and what happened there last week. And that's a good
why don't we take a look at the K-Web? I like the K-Web right here, man. I like it right here. No? You see this, Spencer? This is the ETF Inception. You see that? You know how we talk about those IPOs? It's the same thing. Look at the low from the ETF Inception, and it's still coming into play, right? How many years later? 10?
That's so weird because there's nothing fundamental about that price. It's just the price of the basket when it opened up.
That's right, because fundamentals are not what drives prices. Positioning is.
Yeah, I know.
Number 297,000.
Yeah, I'm saying there's no significance to $26 other than that just happens.
Spencer, stop. This is China. There's nothing fundamental about any of this.
That's also true.
Talk about garbage in, garbage out. And also, Spencer, you were asking me last week if there's market memory, going back 10 years, going back that long. Well, here you go.
Yeah, I mean,
right?
Yeah.
Listen,
right.
You might not remember what you were doing with Chinese stocks in 2013.
Nothing.
But from an institutional standpoint, there's market memory here. We can continue to see it again and again and again and again. So that's what I'm seeing in China. Strazza, why don't you fill me in on what happened with the BRICS? It's a bunch of bullshit, is my understanding.
I like where your head is at with the
How am I doing? Am I close?
What?
The BRICS, it's bullshit. The currency, it's nonsense, right?
No. I'm not talking about the new currency. I'm talking about having computer problems this morning.
Because there is no new currency.
No, BRICS just expanded their block. So it used to be Brazil, right? Russia, India, China, and they added South Africa.
And what about Korea? And Korea.
It started as an acronym. It's actually really cool. It started as an acronym that was created by Goldman Sachs like 20 years ago. And the countries came together and they were like, this makes sense. Like we should do something together. And it became an economic block. After the sell side had the idea for it, then they actually it is a group now. It's an organization. And now they're trying to become more powerful, right? Expand the scope and magnitude of their economic block. And they're adding 6 or 7 new countries. Do you want to talk about them? It's kind of, it's actually rather interesting.
What are they adding?
I'm trying to get a list here. Spencer, can you help me?
Yeah, Argentina, Egypt, Ethiopia, Iran, and Saudi Arabia, and the UAE. Wow. Okay.
So
what about Iraq? What about the Iraqi dinar?
So hold on. They're never going to add Iraq. They added. So it's obviously very political, these decisions, right? They were.
It's only political.
They were hesitant to add Iran for obvious reasons.
Who's they? First of all,
the bloc, right? So the original BRICS are an economic council. And now
so you got a guy from Brazil, one from Russia, one from India, and one from China, and they all get together and make these decisions. I'm pretty sure that's not how it works.
And South Africa.
No,
and what about Korea?
They're not part of it.
But it's BRICS, BRIC, turned into BRICKS.
It's BRICS.
Yeah, but the K. BRICKS.
There's no K.
How is South Korea not one of these most important emerging markets?
Can we get a BRIC representative on the phone? I don't know. I can't answer that question for you.
I call bullshit. I'd say there is no BRIC representative. And if there are, they're not equally distributed.
So here, they added Iran. They figured.
And why is Russia still in it?
You're asking unanswerable questions, man.
Okay, that's fair. That's a fair. Fine. Touche.
So they knew they were going to piss off the United States by adding Iran. So they added UAE and Saudi Arabia to kind of I never realized, but we're very close.
So they're smoothing out the Middle East there.
Right. So, but the United States' trade relations with Saudi Arabia, despite the things we know and hear about Saudi Arabia, these guys are homies.
We're tight. We're tight with them. No
don't they kind of need to be? Excuse my ignorance.
Listen, I'm not saying it's a bad idea. I'm just saying, I don't think many people know that. This is a very
Spencer, get one of these BRIC people on the show.
All right, stand by.
All right.
All
You don't have to do it today. Maybe tomorrow.
All right.
If we have availability.
Let's move on before he asks any other impossible questions.
All right.
Listen, I'm here to ask questions. Contrary to popular belief, I don't have all the answers, Strazza. I have a lot more questions than answers.
Okay,
I feel like my 3-year-old daughter. But why are we going so slow? Because there's traffic. Why is there traffic? Because it's rush hour. Why is it rush hour? Because everybody it's just nonstop.
Hold on, James Bradley. The U.S. may have a lot of money, but the U.S. is small compared to the rest of. No, it's not. I mean, in what way? It's actually like massive compared to the rest of the world.
Maybe he's referring to that chart that went around the other week of the largest cities and metropolitan areas in the world.
So by population, maybe, but anything money or markets measured out, the United States is literally half the world.
Sure. Yeah.
Okay, so a few weeks ago, we were having a conversation about the COT data, and after that conversation, it was this is around the time JC bought your bonds, right? And
diversify your bonds.
Sure. Anyway, we had several people reach out and say, "Oh, you guys were talking about COT. You got to talk to this guy, Jason Shapiro." We're like, "Okay." So I reached out, and he's here. So we've had a few people in chat already say Jason is the man, and he's here right now to join us. So without further ado, let's bring on Jason Shapiro from the Credit Market Report, and let's talk about this stuff and see
bring him out,
how he uses it, and how we can learn.
Woo-hoo. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jason, welcome to the show.
Thanks for having me. You guys are killing me.
Oh, God. I certainly hope not.
First of all, I'm glad I finally got to be with a group that, shares the same fashion sense as me.
Oh, yeah.
Well, I appreciate you being here, but let's hear it. Tell us why. What is it that you appreciate?
I mean, I got my Zeppelin shirt on this morning. You know what I mean? I'm keeping it pretty formal for me. So it's just good to see.
We screen you. Spencer screens you in the green room, and if you have a suit on,
you're out. Right. Yeah. Also, Steve, I gotta say, you got the Tim Tebow look going down pretty good.
There you go.
AC does.
No, you.
Me, Tim Tebow, huh? Hey, he's a handsome guy. I was just watching that new Netflix series. Have any of you guys seen that about the Florida Gators?
I heard it was not worth my time.
No.
If my quarterback is a virgin, I don't want to watch that team. Jason, where are you located? Whereabouts are you?
I'm in Rhode Island.
Oh, nice. I was just there a couple weeks ago. Very cool.
Where were you? I'm
Newport. My sister just moved to south of Boston. So we were kind of just bopping around. I'll be back next month. Gonna take my wife and kids to Newport. Maybe a little dinner in Providence. I could use some recommendations.
Stay away from Providence. That's my recommendation.
Stay away from Providence. Okay. All right. Here we go. What about Chinese stocks? Do we stay away from those too?
Yes.
Why, Jason? Why? Because we've had 10 guests on this show since we started doing it that are saying no to China. We need a reason. We need more.
They're going down in price, right?
I lived in Asia for a long time, 7-8 years, and the lesson I got was there's got to be better places to invest in some communist country. I'm not saying K-Web can't go up. I'm not saying everyone hates it at this point, and therefore it's due for a bounce, all that kind of trading stuff. But as a whole, I don't know. Like when I was in Hong Kong in '92 was when I first got to Hong Kong, and the idea back then was, this is the future. Asia's the future, and if you're gonna, long-term invest your retirement money and all that stuff as a young man, I was 23 at the time. Then Asia's the place to be. Hong Kong's the place to be. Well, all that turned out to be true. China in 1992 had nothing going on and went from nothing to obviously, the hugest thing in the history of mankind. And the Hang Seng Index gone from 12,000 to 18,000 since 1992. I mean, it's been a horrible, horrible investment.
But Hong Kong must have been a good time in the 90s, huh?
Sorry?
Was Hong Kong a good time in the 90s?
Yeah, is that where you...
It was a good time. Yeah, it was a good time. Being single, living in Asia, it wasn't a horrible thing.
Was Lan Kwai Fong popping off yet at that point?
Lan Kwai Fong was popping off. I was there the famous night of New Year's Eve when 9 people got smothered.
Okay. Anyway, so let's talk about your trading and your strategy and sort of how you approach the markets, because you use a lot of COT data. We use it too a little bit as well. But why don't you talk about sort of how you came to or how your strategy came to evolve, and how you came to use this stuff, and how you use it.
So the way that I trade is I'm really looking to fade the masses. So how do you figure out what the masses are doing? There's a few ways. You can listen to the people on TV, listen to what everybody's talking about, go on Twitter and try to figure out what everybody's doing. Which is a little bit unsystematic in a way. More systematic is the Commitment of Traders reports shows theoretically what people are doing, at least in the futures market, right? So it can show you where people are all one-sided, so you don't have to kind of guess. So that's what I use it to measure, is where people are really getting super one-sided in things, so I can be looking to fade that mass sort of consensus.
And are you looking to take the side of the hedgers and fade the large specs, or how do you approach that?
At the extremes, I take the opposite of the same side as the hedgers and the opposite of both the large and the small speculators.
Sure.
So I need them both to line up, because the small speculators, as we've tested this data, are really the biggest fade.
Sure.
So I want to be extreme on both of those.
So you're not aggregating the speculative positioning. You want it separated between the large and the small. A lot of times we'll put it together.
Yeah, I like to see it separated.
That's interesting. And then, so what markets are you relying on COT data most for? Like one of the discussions we have internally is, this probably works better for something like commodities, where most of the volume is actually in the futures market, than it does for something like, S&Ps.
It's a funny question, because I just had a conversation with a guy the other day that was saying the same thing.
Yeah.
And I've heard that many times,
right,
when I used to go out and, try and raise money from people, and they would say exactly that. Oh, well, how can you trade the currency futures? Futures are such a small part of the currency market.
Right.
And I think that inherently makes sense on paper.
Mm-hmm.
But the truth is, I've been trading the way that I trade now. I've been doing for, God knows, probably 22, 23 years.
Right.
And so I'm able to look back at where my best P&L is. And I can tell you, my best P&L came from stock indices, which you wouldn't think.
Yep.
And I've had great P&L in currencies, which you wouldn't think. Now we can argue that's because on top of just using COT, I then have to kind of make a read. So I can probably get a better read in the stock market on what everyone's doing, because everyone's always talking about the stock market. It's very rare people are talking about, lean hogs or even grains or anything like that. Mm-hmm. So we can argue that maybe I get a better read on that. I don't know. As far as the currencies go, when I look back at my returns, I've had very good returns in the currency market. A lot of that has to do with the fact that I had a few very big trades in that, right? I've caught
big moves.
Well, pretty much every currency intervention that the central banks have ever done, I've been on the right side of. And that's because I know that before they do interventions, they wait until the markets are crowded, whether they're looking at COT. There is a report out there you can search on the internet where the New York Fed actually does a specific thing where they're looking at COT and currency movements. So clearly they are monitoring that, because they have a paper all about it, right?
Do they almost wait for the commercials to get on the right side, you're saying, before these big interventions?
Well, they're waiting for the speculators to get, super short before they're going to come in and buy it and intervene, because they know, why throw good money after bad? If we're going to try and squeeze a market, let's wait until everybody's short and then let's squeeze it, right? So I've caught a few big trades because of that. But having said that, recently, you can look, the COT nailed the dollar low in mid-July. You can go look at the COT and see how crowded people were British pound, see how crowded people were in the euro.
Right.
And it nailed that move. So
can we talk about bonds?
We're talking at that time when the dollar was sort of collapsing into July. All of a sudden, the dollar became the big talk again. No one had talked about dollar for a few months there. And then in mid-July, all of a sudden, everybody was talking dollar again. And here comes the dollar collapse. And here comes, the world changing out of dollars and all that. And that was right at the low. But the COT did catch that.
Jason, what about the bond market? When we talk about like extreme positioning, it's been extreme positioning for a bit now, right? These speculators have on some serious positions. I just started buying bonds 2 Fridays ago. And looking to maybe add to these positions. How are you viewing the bond market? Can you tell me what you're seeing from the specs?
Yeah, it's a great point. So What's kept me, fortunately, to this point, from not getting long bonds or any fixed income, despite the fact that you're seeing just record amounts of large speculator shorts, is that the small speculators have not done that, right? They've been long the whole way. So because I need all three to line up, I'm glad that they haven't lined up, because that's kept me out of getting long bonds. I think what's going on that large speculator thing is, I believe that there is just a massive amount of basis trading going on by some of these large hedge funds. You know, these guys have had some serious issues trading equities for the last couple of years.
Yep.
And I think a lot of them have, and I know, because I know some people in the business and stuff, that they've really cut back on their equity trading and gotten back to what they consider their sort of bread and butter, which is doing things like fixed income basis trading and all that.
Can you quickly explain what basis trading
I
is?
wish I could, but essentially, look, they're buying the cash and selling the futures and catching some kind of basis there or whatever. But
like an arbitrage.
Yeah, right. So I think that's why the large spec volume and open interest has gone up so much. Now, I do think that leads to a very dangerous place at some point. But for me, until the small specs give up on it, I can't get long that stuff. And it's funny that you say, "Oh, I've been buying bonds," because and that it's showing up as small specs, because pretty much everybody that I hear has been trying to buy TLT for the last, I don't know, 3, 4, 5 months, right? They're buying TLT. They're trying to buy TLT. They're trying to buy TLT, and that shows up, coincidentally or not, that the small speculators are in fact long the bonds, while you have this massive short by the large specs. So I have managed to avoid that trade for that reason.
And what other extremes right now in the futures market stand out? Anything specific?
There's a humongous positioning extreme in heating oil right now, which had me short heating oil last week, which was an incredibly bad and painful trade. But I'm just looking at it now. I was stopped, and I'm probably putting it back on today, although it's running away right now, right? It's like down 3% or something like that right now as we speak. But there's a massive, just a massive short a massive long by the specs in heating oil here. So I think heating oil short is really the trade.
We're right at those 2011 through 2013 highs. You see this chart, JC?
Yep.
Big level.
I could draw it for you, Strazza. What about in the grains and the ags? Anything out there standing out?
Not really.
Nothing.
Not right now. No.
And what about Forex? Has the unwind taken place, or is there some?
No, it's been amazing to me. The lack of getting out of shorts in the euro, for example, in the British pound. We've had a pretty big move the other way, and usually by now you would see people getting out of these long positions in the euro, but you haven't seen that much getting out. So
let me ask you this, Jason, because I feel like you're the only person that I can ask this to who would give a damn. But earlier this year, there was like a hack with the CFTC, and they didn't report the commitment to traders report for like, I don't know, like 5 weeks or something, like over a month.
Yes.
What were you thinking there? Did you just go on vacation? Were you focused on other data? Like what? First of all, what the hell happened? And second of all, what did you do about it?
What happened? I don't know. They got hacked, and therefore the data was coming out like delayed. It didn't come out for like 3 weeks, and the data that was coming out was delayed. The whole thing is so ridiculous, truthfully. But so for me, I have a algo, because the data only comes out every week. We developed an algo at one point that tries to estimate it on a daily basis, just interpolating it based on price movement, open interest change, volume, and all that. So I was really using that. What I did do was I shrunk everything I had, all my positioning, in half, because I rely on this data. So given that I wasn't sure if the data was correct, I shrunk everything in half just from a risk management point of view. But then I was using my interpolated data.
So I like how you're frustrated with that situation as well. It's pretty ridiculous, but I feel like you're the only person I've spoken to since then who has similar emotions towards it as I do. I feel like nobody else
Don't even
cares.
get me started. The CFTC is so ridiculous. There's no reason that they couldn't release this data every day. There's just no reason. I mean, think about the times we live in. Use one of your, what do they call these? AI, machine learning programs or whatever, and get the data every day. There's absolutely no reason that they have to give data 3 days delayed once a week. There's just
Not to mention, Jason, I mean, you do this professionally, so I'm sure you have a way to clean it up like we do. But when you look at the raw data that they publish, like it's almost like they don't want the public to be able to understand it, right?
Oh, it's
come on.
It's all very, very silly. The CFTC is a very, very silly group of people. I believe, if I'm not mistaken, they are the lowest funded government agency in the entire U.S. government.
And it shows.
It shows.
What a joke. I mean, it's crazy when that whole thing happened. I was thinking they don't have like a disaster plan. They don't have some sort of backup for their data. Like you're saying, this should all be like an automated pull that just updates to the website. They give us this stuff in like notepad format. It's,
and it's a pretty important entity. Like,
and then when they come at me, because I'm a CTA, I have to have all those things. I have to have a backup plan. I have to have, all the things that they don't have.
They don't practice what they preach.
I have to have this, huge, thing that I had to put in case my power goes out, so that I don't lose power. And I got to have all these backup plans and all my data backed up to 6 different places to make sure it's all, you know what I mean? But they don't have to have anything.
Will they send a representative out and audit that themselves?
Well, the NFA.
Okay, yeah, National Futures,
which is in a way, it's not the CFTC, but it's mandated by the CFTC.
They work together.
They have to have the NFA.
Real quick, before Spencer gets on here and tries to kick you out, we have some requests from the chat. They want to know what your thoughts are on precious metals.
I'm pretty neutral here. They're getting to a point where I was bearish gold for a good part of this year. They're getting to a point where the longs are doing a good job of giving up. They haven't gotten to the point where I am interested in buying it here. Mm-hmm. I think given that the dollar is most likely going to continue to go up,
right?
I don't think that gold is necessarily the greatest buy here.
Yep.
We will get to a point where they will give up on this dollar trade, and I can almost guarantee you, as I'm watching the COT data, how it's been doing, when they give up on that dollar trade, they will also give up on the gold trade. And suddenly they will be short gold, and that will be the time, I believe, to get in. This doesn't always work perfectly, clearly, but from a risk reward basis and from the way I do it, that's when I would get in. But for me, we're not there yet.
Yeah, the chart structure right now would suggest patience as well, I would say.
And what about the equities? Because the specs in the equities market, especially on the large side, I would love to hear your thoughts on the smalls, but they had historic shorts. In Q2 this year on the equity side? Like that's
from the very beginning of the year. I mean, that was sort of the best trade I've had all year. Was long stocks from the beginning of the year, which went neutral in June. So I was out of that whole idea in June. I think here it's been whipping around, just like the market's been whipping around, right? To me, from a positioning point of view in equities here, we have a big moment maybe coming up, right? I feel like the consensus at this point feels like we're pulling back here as we should in August, like we normally do, and we're gearing up for, and please correct me if I'm wrong, but we're gearing up for a year-end rip. I feel like that's sort of where people are at this point, right?
Mm-hmm. Well, I don't know if you're wrong or not. Right, because I don't have information from the future, Jason. Right, yeah. So I agree with you from a seasonality standpoint. Right, we're clearly looking at the same data, but we don't know. But
from a positioning point of view, to me, the important thing is, and what the bears, the whole thing is people were so bearish the first half of the year. So when are they going to give up? Right. There's 2 ways they can give up. One, they can just capitulate at the highs, which they didn't do and they haven't done. It doesn't seem like they're going to do, right? Or they could wait for a pullback and then buy it, right? And say, okay, at least we're buying a pullback here. The VIX is back above 20 and we can buy here, right? So I think that should the S&P actually go back to that 200-day, which is somewhere around 4,200 or whatever it is, 4,150, somewhere in there. If we pull back to there, and then people do in fact buy that, it's one thing to say, as you know, that you're going to buy it. If all these bears actually end up buying that dip, which will show up on the COT data, then I think the market's in trouble. You know, because if you think that the market's just going to, all right, you missed this whole bull run, which is what most people did. Now we're going to pull back. It's going to give you a chance to buy it, and then it's just going to rip into the end of the year. If you think it's that easy, you got another thing coming, in my view. So if they are going to buy that dip, which they haven't yet, but if they are going to buy that dip, they have been starting to buy this, but if they massively buy that dip down at that 4,200 level, then I think the market's in serious trouble. Usually for me, they chase and I get to sell like at the highs kind of thing, right? But sometimes, like COVID, for example, because when COVID first hit, you have to remember, people didn't think it was COVID when it first hit. They thought it was bird flu, right? So the first 2 weeks the market came down, people bought the shit out of it. And that gave me a chance to get short there, but it wasn't at the high. It was sort of 2 weeks later, right? So maybe that's what's going to happen here. I won't know, obviously, until they actually do what they're going to do. People are like, what do you think they're going to do? I'm like, until they do what they're going to do, I have no idea. Let them do what they're going to do. Now, if they sell it down there, then sure, maybe we can have that, in my view, have that year-end rally. But right now, I'm kind of feeling like they're going to buy that dip, and that's going to be a problem.
Interesting. I like that perspective.
Jason Shapiro, I didn't even mention the fact that he's profiled in the Unknown Market Wizards book. So if you haven't read that, you should check that out. But Jason, chat's loving this. We'd love to have you back on again soon. Great conversation. Thanks for coming on and hanging out with us today. We appreciate it.
This is great. Thanks, Jason.
Me. I'm going to watch you guys. You guys are cool.
Oh, I appreciate it. Thank you.
Look at that.
He thinks we're cool because we look at the Commitment of Traders report, right? So he has someone to talk to about it. And
we made a new friend today, everyone. We all made a new friend. Everyone, pat yourself on the back for making a new friend.
Good egg. Good egg. Futures trader. We could be friends. Lived in China. Good friend. Good egg.
Yeah, we'll have to have him on again. That was great.
Yeah, that was good.
Thank you for the recommendations. We had, like I said, we had several people reach out to us and say, you got to talk to this guy, Jason. If you have any ideas, we actually had somebody reach out to us over the weekend about Katie Stockton, who is on the list of people to get. But if you have any ideas for anyone you want to see on the show, you can put it in the chat. You can email us questions at stockmarketmedia.com. You can DM us on Twitter, whatever. And we do take all suggestions seriously. So you never know.
And it's cool because for you guys who watch every day, you guys know Kenny Polcari, another good get there. Bring in Kenny also.
I can get Kenny on.
A lot of our guests, pretty much all of them, are old homies of ours, like old drinking buddies of mine in New York and friends of Strazza. Like these are just our friends. And as great as that might be, like we can make new friends, right? Jason in the house coming through today. We'll have other new friends coming in the future. Caleb Franson is not an old friend. It's a new friend, for example. Right? Yep.
It's a good point, JC. Like, in fact, like as strong, you're humble bragging about how awesome our network is. As good as it is, we should reach outside of it more.
Well, it's not a humble brag. I mean, our friends are some of the best traders, analysts on the planet. PMs. I mean, these are just facts, right?
It's just facts, right?
It's just facts. Right.
Just facts.
But we're not friends with all of them, right? So like, we can make new friends. Yeah, get Kenny Polcari here.
I can do that.
By the way, when Kenny Polcari comes, I don't know if we're going to talk about the market or recipes.
No, we'll talk about whatever he's cooking that week.
We'll talk about dude. This guy's recipes are ridiculous, man. So Kenny Polcari used to write his note, and then in the bottom of the note, it would be like his recipe of the day. Like that's good marketing.
Mm-hmm. Mm-hmm.
I like that.
Let's get into some headlines here, Spencer.
Yeah.
I'm trying to help you out. Seems like an extra slow Monday to me.
So I was reading that apparently just based on exchange volume, this is the lowest volume week of the year. I wouldn't have guessed that, but I guess that's what I read. Just regardless of
end of the summer, right, JC? Makes plenty of sense.
It's whipsaw hunting season. This is one of my favorite times of the year. This week and the week after Christmas before New Year's is two of my favorite weeks of the year. And the reason is because, as they say, low volume. You got the B squad on the desks, C squad D squad, right? Like the A team is in the south of France or in the Hamptons or down at the shore or wherever it is that they go. And the guys at the desk aren't able to do much. So what ends up happening is that trends, extended trends that have been trending for quite some time, whether it's in energy or bonds or stocks or whatever, tend to extend a little bit longer than they would normally. Downtrends continue to extend lower, uptrends continue to extend higher, and then after Labor Day or after New Year's, depending on which time of the year, the big boys come back, and then you get the big move, and then you get the key reversal. So this is a period where my eyes, like I said, whipsaw hunting season. So we're hunting for whipsaws. So we're looking for extended trends that perhaps are a little too extended and looking for an unwind. We've caught huge winners. The stock market as a whole, particularly the growth stocks in the NASDAQ, was a great example at the end of last year.
And we always want to be aware of, that dynamic this time of the year, but I think we want to be particularly keen to it in an environment like today's, where more broadly speaking, the trend is messy, the trend is sideways, and this just really fits really well into kind of the current market environment, where we have overhead supply everywhere, breakouts aren't sticking, breakdowns aren't sticking. So yeah, messy markets for the win heading into September.
Just last thing on China before we bring Kimmy on it. The timing of that economist cover that was from this last week or this weekend.
Yeah.
The timing couldn't really have been better, because you wake up this morning and China's all trading higher because they're cutting this trader tax that they have in half. First time they've cut this tax in I think since 2008. It was the last time they cut it. So China's all trading up today.
because they have all these levers, right? And they'll keep pulling them as they need to. And the rest of the world is out here tightening and raising interest rates, and they're out here trying to stimulate. It's like they're always doing the opposite, I feel like. What's a good way to put a bid in your markets or to support asset prices? What's a really good way?
Reduce transaction fees.
Not be communist.
That also works.
That's a big lever that you
could try that.
Pull.
Don't know.
Hey, all this stuff.
Shout out to Evergrande out of their 17-month trading halt today.
I mean, dude, it's one thing to say, this is a communist government. Maybe we want to stay away from this market, right? There's some communist governments that more or less will just leave things alone. China's not even communist; they're a predatory government.
Yeah.
You can't operate there. The level of uncertainty is insane.
All right. We got Kimmy here. She's waiting patiently. Enough China for one day. I can't take it anymore. Let's bring.
Done
Kimmy
with
on.
China for the week.
All right.
I called it. Kimmy's like, oh, it's Friday. I'm not going to do much trading. We set the over-under at 2.5 trades, and I took the over.
Yeah, we did.
Sure enough, Kimmy 4 for 4 on Friday when she wasn't going to trade much because she doesn't like trading on Fridays. JC's right again.
I didn't listen to my own rule. It was so whippy, the market Friday. It really was. And, I mean, look, I bought Boeing. And it kept going lower against me. I added to it. And then at the end of the day, there was news out and it was up at 220, right? I was like, damn. I was like, couldn't that happen while I went in it, while I bought it?
I've never seen someone complain so much while they're making money. Kimmy? It's unbelievable. I've never seen anything like it.
I always say it's JC. I'm a woman.
No comment. You said it, not me.
Okay, so
I'm not trying to get canceled here.
So 4 for 4 on Friday. Boeing, which you mentioned, Adobe, Caterpillar, and Ulta.
I did short that Caterpillar, JC. I would have came in before. I wanted to come in like at 271 on it, but it was so volatile and whippy that I got in it late. It was really. I
like Caterpillar from the long side, Kimmy. You don't like it against last week's lows now?
No, not now. I mean, I have to see if it breaks down again. It keeps holding this.
So you're still looking at it from the short side. See, I'm looking at it from the long side against last week's lows.
No, that doesn't mean I have to see the way it trades. I have alerts, right? It goes this way, I'm gonna go this way. It goes this way, go that way. Caterpillar is actually it's a pain to trade. It can be a little bit annoying.
Is there a stock out there that's not a pain to trade, Kimmy? Out of curiosity.
They all are. Some of them. You see 3M gapping up. We were in that. We traded that last week or the week before. I think this past week we traded it. News came out. We could see how it hangs on to like the 105 level. Maybe it runs up to 109. I'll watch that. It's going to be hard because there's news around it. So, news, it's like earnings. They're kind of, those are very hard to trade because all of a sudden they could slam it down and go back down to the gap to 100 or rip up to the 200 day.
Walk me through the snow trade. What do you think? What are you watching this morning?
On snow, I mean, listen, the market's gapping up. So is that name going to break down right now? I just have it in my, a lot of times just because I recommend a name doesn't mean it's going to trigger or be ready to go. I need to see that name reverse. It is below the 200 day, but it could, that name is super volatile, right? I mean, look at the spreads in it. So it could reverse back up, break above the 200 day, or, if it really breaks below like 146, it has a shot down to like 141 to 140.50 or so. Since earnings were not that great.
And then can you talk to me about this week in general? Last week of the summer, going into Labor Day.
Yeah, last week of the summer. Listen, my buddy's super head up at a big bank in New York, big financial company in New York. I mean, he's on the beach, he's not he's on the beach. He's a pretty big guy. He's texted me yesterday. He's like, Amagansett misses you.
Nice.
I'm like, I miss Amagansett, my favorite place on earth.
All right, guys, if you actually want to trade with Kimmy and get her picks and her trades as she's making them and not like the morning after like we do on the show, you can try going to the link that's in the chat. It's scrolling at the bottom of the screen. It's also in the description. You can pop in there, actually trade with her, get her trades in real time, right? That's the whole point, in real time. And as we said, she was 4 for 4 Friday. She has winners every single day. And it's a fantastic room, and her strategy is crushing it. So, Kimmy, we'll let you head in there for the day.
And,
thank you.
Go make some money.
And by the way, so for compliance reasons, it's not really something to say she has winners every day, but
true,
she legitimately has winners every day.
Real fast on just on the 3M thing. Is there anything that Wall Street loves more than a settlement? I don't think so. I think settlements are like number one on the list of things that if you announce it, your stock will go higher. 3M is settling with the military $5.5 billion settlement over faulty earplugs, and that's why the stock is up 6% today. So, man, settlements when unknowns become knowns, I guess. I don't know.
And can you throw up slide 2 there so you can see exactly where this is happening? So news or no news, this is perfectly logical. Former resistance turning into support. So to answer your question, Spencer, is there market memory 10, 15 years later?
Yeah.
The answer once again is yes. Here's example number 3,297.
Oh, all right. That's a lot of examples.
I got more. We can keep it going.
Yeah. I don't know. Yeah, 3M is just like, to me, it's just such it's a stodgy stock, right? So
it's a who?
Stodgy.
What is stodgy?
Slow, stodgy. It's a staple. It's a
It's not a staple. It's an industrial.
All right, that's fair.
What do you
I
mean
guess
stable?
I don't know.
Industrial as industrials get.
All right, fine. To me,
it makes to me, Spencer.
That's a staple. That's yeah.
It's an industrial conglomerate.
All right.
No, to be fair, Spencer makes a great point. This company makes a ton of stationery and stuff you'll buy in the aisles at a CVS, whether it's pens.
They make Post-its. Yeah, come on.
I'm with you.
All right.
They pay a 6% yield.
Yeah, because look at the
stock got crushed. Fair enough.
Listen, they are on their way straight out of the Dow. I think that this company's market cap is approaching Walgreens at this point.
50 billion.
Well,
Walgreens market cap keeps getting smaller. I don't know if you noticed.
They're going to start moving these stocks straight from the Dow to the Russell 2000. I mean,
hey now,
crazy.
Okay.
They waited. listen, they waited, 5 extra years to kick out GE? I mean, they must have had some good friends over there on the selection committee, general election. But same stuff with Walgreens, Disney, 3M. These companies shouldn't be in the Dow anymore.
Speaking of pharmacy chains, I don't know if you guys saw that Rite Aid is going to file for bankruptcy. So
really,
yeah.
Can we do a Verizon
I'm
chart?
surprised Rite Aid hadn't filed for bankruptcy yet.
Yeah,
Are you sure they haven't? It's been a shitty company for like my entire
well,
career.
they're doing it really because they're going to get buried under this opioid lawsuit. So they're doing it because of that. But
by the way, one of the greatest ticker symbols ever, RAD. No.
Hey.
Yeah.
What is the throw up chart?
So hold on. Does that mean that there's going to be no more Rite Aids? Because I got a Rite Aid right by the crib. I'm there all the time.
You know that's not what that means.
I'm asking. It means that sometimes, but not that. Rite Aid's still.
I don't know. They haven't even filed yet. They're going to file, according to the reports today.
I mean, the stocks is 0.
Yeah.
What's the ticker symbol? RAD.
RAD.
Yeah. Wow. Yeah. I mean, how do you mess this up? That you just sell medicine? I don't understand.
Man, this is a penny stock, man. It's $40 million in market cap. Wow.
This is Rite Aid. This is one of the most seen places in New York City. Every corner.
Do they have a lot of Rite Aids in New York City? I don't think so. I don't think that's right. When was the last time you were in New York City?
I don't feel like that. I don't think
there's any Rite Aids in New York City.
I don't feel like that's true.
Don't they own Dwayne Reed?
No, Walgreens owns Dwayne Reed.
Oh, okay.
That's the other shitty pharmacy.
All right. Well, Rite Aids are still everywhere.
Strazza just being racist among shitty pharmacies.
Not to be confused with CVS, the third.
I go to CVS. It's terrible.
What's up with those receipts, man?
They're all bad.
They're like the longest. Is that necessary? I don't understand.
It's so anti-ESG.
Okay. You guys want to do hot corner real fast?
Hold on. Let's get a little update on the market because I know how much Strazza likes it when I talk about the market before it opens. Here's the Dow futures up 45 basis points, 155 points on the Dow. Nasdaq up 70 basis points. Bonds up again. Gold, silver, copper all flat. Oil flat. Natty gas up 5%. Dollar pretty much flat. VIX inching up as interest rates are falling. And that is your pre-market rundown. Brought to you by Rite Aid.
Michael in the chat is I know you're making a funny, Michael, but I would actually believe it if shrinkage was a problem at these places. It's easy to steal from a place. Not that I'm not taking experience. It's just easy to steal, right? So
shrinkage is that's Spencer's excuse too.
Okay, it's Monday, man. Come on. Let's get the week off to a good start. All right, hot corner. Let's go hot corner.
Hot corner. So hot right now.
All right.
All right, JC. Tell me what stood out today.
Well, funny, I saw Stadium Capital making a big move, and I kind of looked at it this morning, and I'm like, Stadium Club, and it brought me back to my baseball card days. I'm like, Stadium Club still around? But it's not. It is Stadium Capital, which is kind of a cool name for like a fund of some kind.
What's the company that just bought Tops?
No, that was a SPAC, man. So Tops.
Really?
Oh no, but it got canceled because Tops lost the exclusive rights to MLB cards, so they put the SPAC deal got called off.
I thought they were waiting for that to happen and then just lowballed them on the offer because of it.
Oh wait, is TOPP? Is that it?
I went to a Tops. I went to a shareholder meeting, a top shareholder meeting.
The top SPAC merger was called off.
I used to go to shareholder meetings. You know that, Strazza? Fun fact about me.
But what was that company that was trying to buy them?
It was a SPAC. It was Mudrick Capital. What was the ticker on that thing? Gosh darn it!
Oh, all right, I'm thinking of something.
Yeah,
forget about it. Yeah, like something fans. What is that company that sells gear? Not OnlyFans, but some other.
No. You're thinking of
Fanatics.
There was a deal there.
Yeah, there was. Fanatics got the rights to MLB cards. They stole it from Tops. So
whatever.
Yes, you're right.
What about the was it the CEO? director and president and CEO, wears a lot of hats, probably knows a thing or two about the company, and he bought $1 million versus worth of NiSource, ticker symbol NI, which is a $11 billion utility stocks.
It's a regulated gas company. Yeah.
So $1 million is not nothing. Do we know this guy's net worth? Lloyd Yates, Mr. Lloyd M. Yates. You think this guy's rich? No, he's only got a net worth of 40 million, and then this other one has an estimate of 10 million. I don't think this guy's that rich. So based on the 3 responses, we got a 4 million net worth. So $1 million seems like a lot for this guy. And he's the president and the CEO, and the stock is going from the lower left to the upper right, and it's a utility stock.
Yeah.
What are you thinking here? This is worth a look. No?
This is a big one. This is why we marked up the chart. This one stood out. Good job. Yeah.
Hey now, look at me.
And look, it's a nice pattern too, right? This is a nice chart. It's gone sideways for 7 years here. Between these 2 Fibonacci extensions, 29 3/4 is a good level.
Yeah, peaked summer of 16. Summer of 16, I remember it well. Great trip to Cabo. Anyway, been consolidating ever since. My liver's probably still not the same since that trip either. Maybe an upside resolution here in the direction of the underlying trend. Stock market, Mike, I don't think that's a piker trade, man. $1 million for a guy who doesn't have that many million. That's a big one.
And then we have an intermarket chart that kind of supports this. But before we jump to that, who's buying dips and dicks? Throw up the dicks chart.
Hey, long dicks.
So,
What, you gonna short dicks?
So Mathrani Sandeep, this is a director, I believe. Up here, Dick's failed, trying to break out of this nice little, multi-year basing pattern that we've had, in the context of a strong primary uptrend, failed, back in the box. She's out here buying anyway. That really stands out, right? Because Dick's has been a top performer. It's been a leader in its group for years now. And she's buying this weakness, coming off the earnings report.
Is she buying this weakness with this piker trade? Would she put 150 grand up? Come on.
Go ahead. Tell me how rich she is. And
what is she? Is she a director? Sorry, I missed that part.
Yeah.
Okay.
Yeah. Sandeep Mathrani. You think that's a female? I think Sandeep is a male's name, by the way.
Listen,
I don't know.
This is for you. You're the one who goes out here and Googles these people.
Sandeep, first of all, Sandeep is a male name. He's actually the one of my favorite chefs in Mumbai. His name is Sandeep. He goes by Sandeep.
Right.
I'm pretty sure this guy's loaded. He only bought 150 grand.
His name's Sandeep. He's definitely loaded.
He's not loaded. No, it says his net worth is about 13 million, but this is a piker trade, man. 150 grand. I don't care. Come on. You think I get up in the morning for $150,000 trades? Come on.
You are.
All right.
You're so wrong about this.
I'm wrong about what?
$100,000 could be very material to some people who sit on these boards. Like,
you don't know, JC also.
Not everybody is just like sloshing around with billions of dollars. Like, if they're these are people who already have exposure to this stock. They have stock comp packages where they're getting the stock for free. Right. So most people, based on that, would go out and when they're, making open market transactions, adding positions to their portfolio, they're not going to add the one that's already being added through comp. Right. They're going to go buy something else. But she's coming to the market, or he's coming to the market, buying more of his own stock. It stands out no matter the amount.
Hold on. This guy, this is the, by the way, this is the CEO of WeWork.
Maybe now.
Yeah, I mean,
maybe today.
Yeah, for the moment, probably. Yeah.
Yeah, this is the CEO of WeWork.
Oh.
So does that make you like it more or less, or it means absolutely nothing to me? So
I think it's a piker transaction. I think it's a nothing burger. And let's say he got really long dicks, right? Then I'm still not going to buy it.
Strazza,
below overhead
stop.
supply.
We're done with this segment. I want to talk about utilities on a relative basis. It, like Spencer said, JC, it's only a Monday. Good God. Where's this energy coming from?
I'm just saying, like, no matter how long he got dicks, I'm not going to buy it because it's still consolidating. I'm not
going to take
this
this
thing.
off YouTube. Jesus Christ.
Can we move on?
Do you know that I have to, like, on YouTube, it asks you specifically, is this show for kids or not? Right? Because if a show is for kids or not for kids, that determines the type of ads that they will show in front of your video.
All right.
We can move on. And for the record, this show is for kids. I do tell YouTube that. So not today, at least.
For the record, Sandeep, long dicks, we can move on.
We're moving on. Chart report.
Do it.
All right.
I wanted
what?
All right, fine.
And then after
I had a chart.
After.
All right.
Well,
let's get the chart up.
Was I featured on Friday?
No, but the Neto video came out, so that's cool. Everybody check out the John
that's exactly,
Neto video.
That's what I wanted to highlight here. So
I thought they didn't do it. Pat was telling me.
No, they did. You can't see because I already played it, which maybe was a mistake. But
40-minute video. What is this about? 40 minutes of what?
Yeah, trend lines over headlines. I want to highlight here. Maybe I'll just refresh the page because it looks bad. Patrick spoke with John Neto, also unknown market wizard, by the way. This guy has basically that looks way better, that picture, than before.
So John was in the studio Neto, last week.
Yeah, John Neto, if you've watched our show, you've seen him. We bring him on for economic events, and he's got this whole system on trading macro data, and it's actually like an art, really. And so John was in studio because we're doing some stuff with John that's gonna be fantastic. And John talked to Pat about really the art form that is interpreting economic data, right? Because we all know it's not so much about the data; it's about the reaction to the data, and what at any given moment the market is focusing on a different portion of a specific report, because all these reports have 15 numbers in them, right? And so I watched this yesterday. It was a really good conversation, just about the art of interpreting this stuff, because at this point I've thrown my hands up because it's hard, but John has made his living trading these events. Like, literally, he will sit there and he will trade the CPI data, the CPI report. He will be down and dirty in like gold futures and everything, gold, bonds.
Plus the color that you're getting, which a lot of us are not getting legit color on what's actually happening. There's some stuff you could find on the internet. If you're one of these people who still watches basic cable, like, that's a bunch of nonsense. It's just confusing you even more. Like, this is the real deal. And I have been doing this for multiple decades now, and I don't know anybody who is this on point with these economic data levels. I usually just dismiss it altogether. But when Neto speaks, I listen. And by the way, another market wizard, 2 market wizards in one show.
We're going to be doing some stuff with John as well. So some announcements coming your way very shortly.
Even if you're completely uninterested, in this kind of analysis, it's actually fascinating to see what goes into it. Yeah. Right. Like, this is not easy. What these guys go through, like you said, Spencer, 150 numbers in a report. There's one that matters. They figure it out, what it is, dig through it, and then kind of try to interpret it. The art of economic data analysis, that's a good way to put it.
Yeah, because it is an art form. It definitely is not a science. It's an art form. And John's an artist, right? So anyway, that's my recommendation for this week is check out, or today's edition at least, is to check out that video.
Scroll down to Mr. Michael Naus, shout out our Canadian friend here, showing this showing the TLT potential double bottom here. Not a trend fighter myself, but it looks tempting. That's what he says.
He did some sort of workshop with the CMT last week also, which I have on my list to check out.
First week of December, New York City. I will be presenting at the CMT New York City chapter. Fun fact. So I'll have the details on that shortly. It's December, so we got several months until then, so not too worried about it. But I'll give you guys a heads up. I'm looking forward to that.
Wait, Strazza, did you have something above this you wanted to talk about? Like, I feel like you had something to say about
Larry Thompson. Shout out Larry Thompson talking about the fat lady ain't singing.
Where'd you get that one from?
I think it was like old Monday Night Football from like the 70s or something.
You use that one a lot too. But yeah, no, dude, that was John Madden, wasn't it?
I'm not sure.
Wait a minute. Are you saying that he came up with that saying?
No. And the Monday night was turn off the light, the party's over. That's from Monday Night Football.
Huh? Anyway, Chris Park in the chat. We saw the Hawaiian Electric stuff this morning. I don't think there's really anything more to say.
50%, bro.
Well, so that's the thing with stocks like this is like on their way to zero, they're going to rip higher by 50%, like more than once, right? Like that's just what happens. So,
yeah, this is a crazy one. Stay away from it.
Yeah. It's on a death march to zero, but on the way there, it will rip in your face, which is why you can't short it. And frankly, you can't buy it either. So what are you going to do? Honestly, what are you going to do with this thing? I don't know. Trade off.
Where can everybody get the chart reports? Did you
Yep.
drop the link?
I did drop the link just now. It's on the screen. Sign up.thechartreport.com. Check it out. It goes in every single day. It's free. And Pat does a great job of compiling all the best tweets and charts from the world of FinTwit. I read it every single evening. It's fantastic. Okay, now
can we have fun now? I got some stuff.
Yes, I know you do, and I'm here for it. So I'm ready for you.
And you got the special mousetrap chart.
Oh, good name for it.
Ooh, the mousetrap. That is a good name.
We do have the mousetrap charts.
Slide 34 there.
Let's start with slide 12. I want to do a little in market stuff. See what JC thinks about this one. I asked you about this one last week. I think we kind of breezed over in conversation, but utilities back at their old relative lows. And there's a couple ways to kind of, do this. We have the Dow Jones Utility Index, which will give us the most history. And we also have like the sector spider XLU, right? In either case, if you chart either of them against the broader market, and depending on what index it could look better or worse, it's been straight down and to the right, really since the financial crisis lows in the stock market. So since about March of 2009. What do you think about this chart, JC? So I've marked this up for all of the annotations and notes on this chart are about what the stock market was doing. And then it kind of, this ratio is where it is at these key turning points. Am I overthinking this? Is this a total coincidence, or is this kind of a big level? What I'm showing from the left to right is utilities, and this is a classic defensive group, right? So during really, really strong bull markets and uptrends, it is very ordinary for them to underperform. That's what you're seeing on the left-hand side of the chart. 1990s bull market, straight line lower, and we had the dot-com bubble peak. We had kind of like almost like a lost decade there, or half a decade in between the dot-com bubble and the financial crisis, where utilities did outperform. Then off the financial crisis lows, now we've had another just booming bull market during the 2010s, straight line lower again. And here we are kind of at this key level where we were about 20 years ago.
Yeah, I two things. First of all, I think this chart is important because we're back to those former support levels from 20 years ago. So I think that there's contrary to popular belief, Mr. Spencer, there is market memory going back 20 years. Legitimately, we continue to see it again and again. As far as risk on, risk off, that I wouldn't overthink, because in the 2000s, the mid 2000s, it was a rip-roaring bull market and utilities led the whole way. So I remember that bull market very, very well, in fact, and utilities were doing great. So I think it's much less of a risk-on measurement and more of a sector that historically has been rotated into from these levels. I think it's worth a look.
Well, so would you say that Staples on a relative basis gives you risk-on, risk-off information?
Yes.
But not utilities?
Correct.
Is utilities too much bond market? Is that why you're saying that? I've always kind of worried.
I'm saying that because the data those are facts, right? So it's not so much like my opinion in terms of, if you're asking me why that's the case, is it more bond market related? Yeah, there's probably something to that if I had to guess.
like right now, it's like, sure, could utilities catch a bid and start to outperform? Yeah, of course they could. But boy, I think it would be a lot easier for them to outperform in an environment 10, 15 years ago when rates are near zero.
Well,
tough.
If bonds rip here, how are utilities
Yeah.
going to do on a relative basis? Do you think they're going to make new lows on a relative basis, or do you think they go with bonds?
They're a bond. It's a bond proxy, right? So it's going to move high.
That's what I think.
All right. So enough with this chart. I think I was overthinking it, but I still thought it was kind of cool where those turning points.
Well, I don't think you're overthinking it. I would not overthink the intermarket risk implications, but from just on its own, focusing on the sector on a relative basis, I do think there's something there, or at least there's enough potential to take a look. So I don't think you're overthinking that part.
All right, so JC knows as much about the Dow Jones Industrial Index and its components as anybody I know.
I know so much, and I know that's not even the name of it. Dow Jones Industrial Average.
We're going to play a little trivia game.
Okay, go.
All right. Real fast on this answer, because you might have seen it in the chat. Probably
I did not.
There are 4 Dow stocks currently below their COVID lows in 2020.
Uh-huh.
Give them to me.
Verizon, Walgreens, 3M, and
come on.
Peter got it. I didn't get it.
Verizon, Walgreens, 3M. That's pretty good. Hold on.
You know this.
Shit. I don't know. What's the fourth one?
Can we get the chart up on the screen, please? Number
Legacy Tech. Old tech.
What, IBM? Cisco, Intel, IBM, one of those?
No, we don't have it. Never mind.
Intel has
I don't want to look at it. It hurts my eyes.
They're at the top of the deck, Spencer. Intel has gotten like significantly worse than the other old tech companies in the Dow.
How is Disney not on that list?
So it is. And that's how the conversation got there. Like Disney's right there.
So then it's 5.
Huh?
So then it's 5 stocks.
I don't know if you want to count Disney or not. Whether it's a closing basis or an intraday basis, it's like
Disney's nowhere near their 200-day moving average.
Talking about the COVID lows.
Oh, we're talking about the COVID lows. Sorry. Sorry. Yes.
Yeah. So Intel, let's run through them. So Intel, disgusting. Stay away. Show the others, Spencer. They're all in line here.
Ugh.
What are we doing?
Why is Intel still in the Dow?
Yeah, it's 3, 4.
Why is Walgreens? Why is 3M? They got a lot of work to do.
These people are just not good at their jobs.
Look at this thing. Verizon, next. Go quick.
Looks like AT&T. Same thing.
Well, we're going to show AT&T too.
Used to be in the Dow, AT&T. At least they kicked that one out.
That was my guess, actually, AT, because I knew Verizon and I thought
AT&T's not in the Dow no more.
I know that now.
Throw up an honorable mention, AT&T honorable mention, because this is how bad things get when you're chasing a 8% dividend yield. This is what can happen to you.
I'm in it for the dividend.
Dude,
listen, I'll show this chart to people who are in love with dividends still today, and I'll say, look at what you own. And they'll say, what about that 8% yield though? I don't. It's like a disease. I don't know.
It's a disease. It's like the people who think real estate's a good investment. Steve, it's like, oh, I bought it 20 years ago for $300,000 and I sold it for $600,000.
You cannot underestimate the psychological power of getting paid.
Yeah,
getting paid, man.
We're addicted to the cash flows. Listen, this is a disaster. Verizon's gonna, end up looking like this as well, and that's gonna be a future non-Dow stock as well. This is just tough. You know what? T-Mobile is now larger than AT&T and Verizon, which is crazy to think. Okay, just 10 years ago, it wasn't even close. And now Disney too. T-Mobile's like, besides Google, Meta, and I guess Netflix now too. In communications, it's T-Mobile. Them and Comcast are like 4 and 5.
What about Google?
Yeah, Google, Meta, Netflix, and then it goes T-Mobile and Comcast.
Fonz, can you bring up slide 34? Just.
Oh, you want to see my chart art? So I was having fun.
Yeah.
Listen, when you stare at as many charts as we do, and then I stare at other things like the streaming apps on my television at night, I was just like, this is too good. These things look exactly
very
alike.
Creative of you, Strazza. I'll give you that.
So this is the Disney logo, right? Are you petitioning to change it to the next slide? Is that your point?
That's an ugly top, man. Look at that top.
Yeah.
Look at that top.
Yeah.
I'm gonna watch that new Jedi Warrior show on Disney Plus.
As well,
dude, I'm taking the family to Disney in December. Man, these costs are adding up, bro. It is not cheap taking a family to Disney World.
No, it is not.
Are you gonna take me while you're there? Because the last time you were at Disney, you were with me.
Last time I was at Disney, I was with you, oddly enough. I mean, technically, we're not at Disney. We were like in the Disney, whatever, the city of Disney. What is it called?
Family of 5. Is that it? Right? That is 5 of you, JC, that you're all going?
Family of 5. And then we got to take in-laws because it's 3 kids.
Okay. So how are you going for a week?
We are going, I think 4 nights, 5 nights, 4 nights, something
4
like
nights.
that.
I put the over under at 10 grand.
10 grand. I don't know if it's going to be quite that much. With flights, I think maybe you're right, actually. Damn, man. That's a lot.
Over under at 10 grand for a Disney. Disney.
We're staying at a nice hotel. We're staying at the Contemporary, which is, makes our life easier. And we haven't even bought anything. Yeah, man, it's going to be pricey. But I don't know. Maybe if I file bankruptcy before and we can get a discount. Who knows? Probably not bankruptcy. Yeah. It's not that bad.
No, like Spencer said, they'll be spinning off. They'll be spinning off their parts.
Oh,
right?
yeah.
No. Yeah, but the parks is the core. They're keeping the
it's not. I don't think it's the core.
It's the core of the brand. It's not the core of the business. It's the core of the brand. So, yeah, the parks will stay. Wait, sorry, I'm distracted by the chat. Christopher Brown, is that true about the ad funnel? I don't think I knew that. Okay, what else? How
amazing is that? So Comcast, so Universal Studios is bigger in size now than Disney.
In size, what do you mean? In
bigger company, larger market cap.
Oh, Comcast.
Comcast, NBC, Universal.
Sure. Comcast is huge. Yeah,
bigger than Disney.
Yeah. We have Sean here. I've neglected to mention that, but he's been hanging out backstage for a few minutes. So
bring him on for recess.
Yeah. Let's make sure his
great bumper.
Before we do that, let's make sure his camera's on.
We skipped the option segment just to talk shit about shitty Dow stocks.
Let's make sure he's ready. He's ready.
Love talking shit about shitty Dow stocks.
All right.
I can't believe you didn't get Intel.
Happy Monday, boys.
Johnny baby.
What? Johnny baby.
What is happening?
Oh, just selling some premium. No big deal. No big deal. Are we doing some more of that this week? I'm liking it.
I don't see why not. I feel like what we're seeing in the indexes over the last few days has been, encouraging, but certainly not willing to throw my hat in the ring for a resumption back to new highs anytime soon.
Are we still looking for the messiest stocks we could find? Is that still the strategy?
I would love to find those. The messiest big cap stocks, definitely.
It's not hard to find messy stocks, by the way. Speaking of long dicks, what about DKS?
I'm glad you guys have me on when you're talking about long dicks. That's great. It makes sense.
What do you think? I'm not joking. I'm being serious.
Well,
no, it's a really messy one. Right in between those two fibs, you got a nice range. Right. It's a big range.
Look, I'm a little salty on that one because that was a trade we had on earlier this year, and it gave us a couple of good fake outs in March and in May, early May. It looked like we were really gonna get what we came for. Thankfully, we got out before the big collapse last week. Our trade just ran out of juice by then, but I was very bullish on Dick's, early in the year. I don't know what happened. I guess they're not selling. My son just got a new baseball bat this summer. It was $400. I mean, if you can't make margins on that,
$400?
Yeah.
For a baseball bat?
Yeah.
Are you sure?
It's a baseball bat made out of gold?
I'll tell you what, though. Thankfully, I didn't pay the $400 for it. Someone else did, and they bought it at Dick's. And then the kid decided he didn't want to play baseball anymore, so they gifted it to my son. So
wow, that's
very happy to take it.
$400 for a bat? Damn.
Yeah.
Oh my god.
Yeah.
You better hit the ball with that.
JC, get ready. You got 2 boys coming up. Those baseball bats ain't going to be cheap.
All right, let's sell some income. Let's sell some premium here. Daddy's got to collect some cash to pay for $400 baseball bats. Jeez Louise. Is it too wide though, Sean? Like What are we going to do? We're going to sell the 145s. We're going to sell the 60s. Like how,
But you want to sell premium and dicks?
Yeah.
Whew,
that's too wide, right?
These are not the types of stocks I like to sell premium in unless I'm making a directional bet. Like if anything, I'd sell puts, but I don't even want to do that.
What about Snowflake?
Snowflake. Let's look at that one. Snowflake's
right at a 200-day moving average. That moving average is as flat gets. Sell
Snowflake
the wings all day. Are we getting the juice?
Here's the thing about Snowflake is that the chart is great for betting on some sideways action. The problem is just coming out of earnings a few days ago, which is a good thing usually, but the volatility collapsed.
Did it? Damn.
I mean, let's see. If we were looking at, I would be looking at October options. Let's see. 25 delta strike on the put side would be about the 135, which that's I don't love that. Yeah.
I don't love that.
You know what though? You could sell the 120s for $1.20. How about that? I like that symmetry.
I would sell the 120s, but what about the 200s or 195s? Anything up there?
The 195s, you're getting about 95 cents. So if you combine that, if you did the 195s and the 120s, you're getting about $2, a little bit more. That's not terrible.
$2?
Not terrible.
I'm not that excited about it.
Yeah. I mean, I do like that we can get pretty far away. I mean, look.
How far out do we need to go? This is October's?
Yeah, we're in October. We could sell the 120s and on the put side, and the let's call it the 190s on the upside. I mean, that's a lot of room. I mean, this stock would really have to change character for either of those options to go in the money.
Well,
right?
Well, let's at least consider it. But I think this exercise is valuable to the audience who doesn't get to sit on all our meetings every week. To kind of think about how we approach the market in this particular environment. Literally looking for the messiest stock we can find, ideally with elevated levels of volatility implied into it. But so from a price standpoint, this one literally right at a flat 200-day moving average. Cannot ask for a better situation. But after earnings, volatility kind of came down.
I was telling our subscribers on Friday that we're kind of in a weird situation with the market right now, and the fact that I want to be selling premium, I want to be putting on delta neutral trades, but we're in an either or scenario where we can either sell high implied volatility or we could sell a stock at a great range, but we're having a hard time finding both, which is a weird kind of situation. Not
all right,
ideal.
Let's finish up with a little recess. Spencer?
Let's do it.
Hit it. So I'm stepping up my mushrooms game.
Ooh, now you're speaking my language.
Well, not that kind of mushroom. These are good old fashioned, dirty fungus. And so to kind of ease up on the carbs a little bit, to keep Dr. Perlman happy with me, making some pizzas tonight on portobello mushrooms. Really going to try to get them crispy. What do you think? You think that's a no? Strazza says no. That's no good.
Dude, what are you doing?
It's better than. It's probably better. I've done like eggplant before, which is not good. So
no.
It's
I tried it too. That don't work.
Listen,
right.
JC,
how did the chicken crust go?
Awesome. The chicken crust pizza is so good.
Oh,
I've gone down this route. I've gone down this route with portobello.
I'm not going to do that to myself. That's terrible. Why are you changing the pizza? Leave the pizza alone. If you can't eat it, then you don't eat it. But don't ruin the pizza.
First of all, nobody's ruining a pizza. I'm choosing to use a chicken as a crust instead of the sugar.
Listen to what you're saying right now.
I know what I'm saying. I'm a bigger pizza connoisseur than you are. I'm with you, bro. I know this is this is blasphemy, but
this is an affront to pizza lovers around the world.
All right.
I got Perlman in my ear telling me to stay away from the sugar.
When I
stay away from the sugar, I feel better, actually.
Just tell us tomorrow how it is, all right? Just tell us tomorrow.
I will.
Okay. Don't send me a picture of that.
I also have a food-related recess. Did anyone ever buy anything from an infomercial? Ever?
Food wise?
Anything?
No.
Oh.
What is going on in this
Who watches infomercials?
Who eats?
That's the better question right there. Who watches that?
Back in the day.
First of all, where does one watch an infomercial?
Back in the day, not right now. Obviously.
Oh, okay.
Back in the day. Anyway, there was once an infomercial about 20 years ago. And
was it the shake weight?
No, that was like 10 years ago, I feel like. And it was the only thing I ever wanted from an infomercial, and I begged my parents to buy it. And eventually they did. And it was a mindful. And it was this thing called the perfect pancake. Do you guys remember that? Nope. It was this basically. It was this thing. Okay.
Oh, he's got props. I like this.
Yeah. And I have the video too, if I could even play it. But it was supposed to make anyway. So I begged my parents to buy it. They bought it. We used it once and never again, and then forgot about it. And then fast forward 20 years, about a month ago, my parents found it, I guess in the basement somewhere. They're like, "Here, you made us buy this. Do you want it?" And I said, "Sure." Wait, I have a video here. It might not play. It's super.
Well, wait, there's more.
Okay. Anyway, exactly. So anyway, I used it over the weekend. And gotta tell you, it makes a pretty good pancake.
A perfect pancake?
Yeah, it makes a really good pancake. So the only issue is it doesn't close all the way. Like there's a gap, right? See that? So you just got to make sure it's cooked when you flip it. That's the only thing. But infomercial. Who knew?
There's just quickly before we run, there's a gentleman who like basically invented the infomercial.
Yeah.
His name is Dave Delgado, and Dave Delgado used to buy all this like cheap time in the middle of the night and sell like real estate get rich quick schemes or whatever. Made a fortune. Now owns a winery in Napa Valley called Delgado. And if you're in Napa and you want a very cool tasting experience, doing the cave barrel tasting at Delgado in St. Helena is an unbelievable experience. Shout out Dave Delgado, king of the get rich quick in real estate scams. Makes great wine.
Hey, you know what? We could shit on online shopping or sorry, what was that phrase you used, Spencer?
Infomercial.
Infomercial, right. Yeah. We could crap on it all we want, but I will tell you that back when I lived in Florida many years ago, I had a good friend of mine who worked at the Home Shopping Network in St. Petersburg. They had a big campus down there in St. Pete. And boy, the stories I would hear of the money that was being made on some weird ass products, man, it would make your head spin. So someone's buying this stuff. It ain't us, but someone is.
Hey,
I think we're too young for that sort of thing.
I can attest. It works. Okay. Strazza, what do you got? Anything?
He's disgusted by us.
This was the worst recess ever, guys. You should all try and do better.
We are all now dumber. And
I'm watching a cool new documentary. I think it's on HBO Max called Telemarketers. JC Spencer, this one you guys will remember when they used to raise the money for these fraternal order of police things. And it really goes into detail about just how big of scams these things were. And this was huge in the tri-state.
Very local to me. Extremely local to me.
Yeah, because I don't know what you guys are talking about.
Yeah, it started in Jersey, but it became a big tri-state
Sounds like
thing.
something that would start in Jersey.
Yeah.
What a scam. I mean, the doc is pretty good.
Yeah.
The doc is actually really
check
it
out. All right, everyone, that's it. Smash the like. Thank you to Jason Shapiro for hanging out with us. Thanks to Sean. Thanks to Kimmy. Thanks to all of you in the chat. Drop us a like. Give us a follow. We're on all the socials. Do all the good stuff. It is Monday. We're doing the Flow Show, right? That's going to be at 11:30 Eastern time. So stay tuned for that. Until then, have a good rest of your day. Go make some money, and we'll see you guys later.
Adios.
Run it. I can't take no loss. I don't even know what it